How is everyone? Happy Thursday to you. We've got a great topic today about your taxes, right? On Tuesday, we talked about how to make more money. Now that we're making more money, we want to keep more money in our pockets. So we have a very special guest, two guests today. Brittany, thank you so much for your time. Good morning.
Thank you for having me. And my marketing manager came alongside me just to make sure if I have any problems or needs, he helps jump in and take care of those for me.
Good morning, David. Thank you for helping both of us. I may have an issue too. Trust me.
My absolute pleasure. I'm so excited to be here. I love spending time with the Robert Slack family. You guys are
Oh,
amazing.
I love the Robert Slack family too. So introduce yourselves. Why don't you tell us about your fabulous selves and what you do and how you can help our teams?
Yes, well, my name is Brittany Beal. I am the owner of Southern CPA. We have a good sized growing practice here based out of Ocala, Florida. And we offer a pretty good range of bookkeeping and tax services and also business consulting. And that is part of what brings us here today. And I will get into a little bit more of my background during my introduction in the PowerPoint.
Great. Well, I'm not going to waste anybody's time. Let's dig in because, you know, the IRS and how to work properly but efficiently with them is something we all need to know. So take it away.
Thank you. Okay. And so throughout this presentation, Debbie is going to be kind enough to be moderating. So for those of you that might be first joining in with this, if you have questions, you can put them in the chat. And Debbie's going to help keep those relevant to what we're talking about at the moment. And she'll be able to head you up if it's something that's getting ready to come up in the presentation. And any questions that are left at the end or that we didn't or couldn't address during each of the little breaks we're going to take throughout this, you are more than welcome to give the office a call and we will help get those taken care of for you. For the most part, we are going to stick to Florida related realtor interaction setups and transaction questions. So if you have multi-state, I could go ahead and tell you that's going to be a phone call as it's different with every single state. So a little bit about me. I've been in accounting for 15 years. I was an auditor in a past life and a fuel analyst for a big gas company. And then when I wanted to take a little break while getting my CPA license, I wrote an accounting textbook that is about as exciting as it sounds. But it gave me a really good insight for breaking things down and making it a lot more digestible, as tax tends not to be and tends to not be overly enjoyable for most people to want to talk about. And then I managed an accounting department at a good sized firm for about 5 years before starting out and setting up my own firm. So let's jump right on into these Florida entity type formations for realtors. Most people are going to fall into one of these classifications. It would be very rare that someone would go straight to starting a C corporation due to double taxation. So we're going to look a lot more at what would be the more common scenarios. Most people, when they first start out, they start out using their social security number, and that falls them into that sole proprietorship arena. Now, under a sole proprietorship, you have a few things. It limits you. You can't take losses for more than 2 years, 2 out of 5 years, without starting to flag some big red flags with the IRS there. They see it as a hobby if you start having negative tax return after negative tax return, which kind of makes sense. If you think about it from the IRS's standpoint, if you're constantly funding a company for it to exist, AKA taking losses year over year, they are wondering if you're just trying to write off as much of your income as possible. So that's some of the tax planning strategy that we want to be mindful of. Also, sole proprietorships carry a 15% approximately self-employment tax to it. So a lot of times a first-time realtor, a first-time 1099 recipient can become very surprised when it comes to their taxes. They get to year end and they go, what do you mean I owe a whole bunch of money? They have that 15% tax and then your income tax on top of that 15%. So a lot of times that's where the confusion comes in. They think I'm going to have a 15% tax bracket because that's the self-employment tax rate, when in fact it ends up being, and somewhat sky's the limit depending on your income, anywhere from 35% to it can be almost as much as 50%. So that's where we are wanting to step in and save you tax money. Then now, when you're first starting out, it a lot of times makes the most sense though to be a sole proprietorship. Each of these next elements we're going to go into carry some more rigidness to them. They have more requirements, annual filings to them. Some carry W-2 requirements. Some of them you have to be able to go to your board and get approval. And that's the kind of piece that when you're very first starting out may or may not be something you want to jump right into. They also carry extra costs when it comes to your taxes and your tax preparation. And of course, if you're going to need a W-2 under one of these entity type formations, it then carries the cost of having to either go through a payroll company or administering payroll yourself through a few different means, or having somebody like myself do it. So what we tend to see is that good transition between a sole proprietorship and an LLC in that 10 to 15 grand bottom line ballpark. That's when you know that you are an established business, that it's not something that you may jump right out of, or that you don't know if you are going to stay in. We do want to make sure that we are transitioning at the right times. So as an LLC, the biggest difference is it carries liability protection. So in that liability protection that you don't have under a sole proprietorship, it comes with some other requirements. If you want that full use of that liability protection, you need to set up a bank account. A lot of times you'll continue to operate where the funds are coming into your personal bank account. And I will pre-caveat, I'm not an attorney, but I've seen this commonly in practice, and want to start giving you some of the tools for eliminating liability issues that could have easily been remedied with a little bit of preventative care. The LLC in and of itself is, as its name, limited liability company. If you go and put all of your funds you're receiving, your expenses from your credit cards, all running through your personal name, it's easy for an attorney to pierce what's called the corporate veil, that line we've tried to draw by creating an LLC. If we aren't clearly delineating or moving those funds through that LLC. So one of the first steps to this is not eliminating the LLC we just created by trying to still run everything through ourselves personally. So after creating any of these entity types, we're going to talk about LLC, PA, PLLCs, partnerships. We want to set up a bank account, business bank account. And then the next step to that is getting an EIN. Most of those kind of setups can either be, if you're having any trouble with getting them set up, we can help get them set up. Attorneys can help get them set up. That's pretty common practice for both of us. If you run into legal issues within it, that tends to be more the lawyer side. If it's a simpler setup, that's more our side. Now, one of the most common mistakes I see for realtors is trying to name their LLC, PA, PLLCs, etc. I've seen some very creative names. I'm a really awesome realtor. Not a great name for a lot of times having to put on all of your marketing materials. So in a number of these different classifications, and by nature of your guys' licensing boards, you tend to be required to put your name on your marketing materials that you are legally operating under. So most often I tend to recommend, when naming one of these entities, that you use your name. Go with Jane A. Smith. don't get creative in this area of your business. That while it may sound cool to name your company Really Awesome Realtor, you could run into some big problems when it comes to your actual marketing materials. Your licensing board also dictates certain uses of the word LLC. Or PA or PLLC, because it can have an inference to people that are going to use you, that you have lots of liability protection or insurance or things like that. So make sure before you have any marketing materials done that you are in conformance with what your state board requires. Now, when it comes to a LLC versus a PA versus a PLLC, those are probably the most common questions I get. The PA, I would say, is definitely phasing out. PAs have a really big limit upon formation. They can be a C corporation, which has double taxation in it. You get taxed as a C corp and you get taxed as you take money out. Or they tend to be set up as an S corporation. The S corporation, we get those benefits, but a lot of times I don't see moving someone with a tax profit to an S corp until they're at about $40,000 of bottom line profit. Now, when I'm saying bottom line profit, let's think of that as the revenues you've taken in, less the expenses you have going out. And then that arrives us to that bottom line profit. So until we're starting to see about a $40,000 bottom line profit, I don't look to move somebody from an LLC or a PLLC or a sole proprietorship to an S elected tax return. And now where the key benefits to that is going to be in big time tax savings. So we're going to get more into the tax part of it later in this presentation. Right now, it's why I'm choosing which entity. So we will definitely get into how much and why an S corp election may or may not save you money. Now, when it comes to the differences between an LLC, a PA, and a PLLC, the state of Florida, as I mentioned, each state is different. So many states will not actually allow you to create something like a PLLC or a PA, or it may require you to. So if you do have a multi-state need to this has to be a further and deeper conversation because of that, to make sure that we're addressing that specific state. In the PLLC, one of the biggest limitations can be the ownership. The ownership in our state requires that everybody have a license. So if you are going to form a multi-member PLLC, possibly a husband and wife team, or some friends of you wanted to get together and have an LLC together, or a PLLC, you are restricted by using that term professional, that you must have a license. So that can be one of the biggest holdups is, let's say you're a practicing realtor and your husband or wife or partner wants to be able to contribute in their time. They want to be able to do all of your marketing for you and help you. If you make it a PLLC, you could not make them an owner. So that a lot of times is one of the biggest differences. A PLLC also has some cool protections when it comes to malpractice of another member within the PLLC. So if John Smith commits some kind of a malpractice related crime issue, etc., the other person doesn't have personal liability, Jane Smith over here. And so that's a lot of times where people start to head towards that PLLC. A PLLC also requires that you go to the state board to get your articles approved before you can submit them to Florida. So you want to make sure that if you're going to go that PLLC route, that you just don't jump right on Sunday to set up that PLLC and start rolling. It does require you to go through your licensing board. So that is one of the bigger differences between an LLC and a PLLC. An LLC does not require you to do that. It also, now when it comes to forming the differences of the two, our question becomes then, well, why not just be a PLLC? One reason to not just be a PLLC is if you may use your LLC for any other form of activity. If by that using that PLLC, you're restricting the use of that LLC to this type of activity, to your realtor functions. I also don't like to see passive activity used within things like a PLLC, things like real estate renting. We're not going to get into too much on that today of the other things that can be done in real estate behind which of these to form. This is more focused towards just realtors, but more than glad to help you if you have any of those kind of questions, and we can help you get a meeting set up for that. Now, PA, I would definitely say, is getting to be a little bit more archaic. It isn't something that I see as common use and in practice. And partnerships, they flow through to you personally without as much tax benefits. Also, again, starting to see those less and less in use because of that. And they have other certain limitations to them. One of the biggest ones being that you're going to still have that self-employment tax. It flows through to each of you personally, very similar to how our sole proprietorship does. Now, with that sole proprietorship, that falls on your personal tax return. So we're not gaining another tax return yet. An LLC could still fall on your personal tax return. So could a PLLC. So again, not quite gaining that extra taxation, but we can make elections for an LLC or a PLLC to be taxed as an S corporation. If we have multi-member, it can be a partnership. There can be certain multi-member circumstances under an S corp, but you want to talk through with a tax professional before deciding to change your entity types, just to be on the safe side, and to make sure that you're getting the money out of the company the way you intend to get money out of the company. Rarely would I ever recommend a C corporation, especially I'm expecting tax rates to go up for corporations and capital gains rates to go up for everything. So we want to be very careful about which entity we form. Before we move on, we'll take some questions. If we have any entity type formation questions.
We do. We have a lot of questions about LLC, Brittany. So let's go back to the naming convention as you were talking about for an LLC. What does it need to be my first and last name? If my first name is a nickname, do I need to have my legal name? Let's talk a little bit more about naming our LLC.
Well, and I've definitely run into a number of different brokerages having different requirements for this. So I spoke, of course, with Robert Slack. They didn't have a specific restriction to it for that specific naming piece of it, but other ones do in the state of Florida. So we want to be careful. We want to be thoughtful about it. You're going to have to use it on your marketing materials. So the biggest piece of that is being mindful of that. And when it comes to a nickname, a lot of times I've noticed people will put their name and then do the nickname in quotes with it. Again, make sure you talk with your brokerage and look at the licensing board before making that kind of a decision with your naming convention.
If I'm married, well, let me go back. So you're saying that if I have my business cards or any marketing material, it has to have my LLC name on that material.
Standardly, you need to use the name that because that is what you have now registered with the Florida boards as what you are operating under. So when you do your first transition here from a sole proprietorship, and when you register as a sole proprietor under your personal name, your social security number, etc., and you go to register your license, you've registered that license with that you are associated with Robert Slack. When you go to make a change to your LLC, PA, PLLC, you let Robert Slack know. They usually have a form that's going to be filled out in that transition process. And for you to become associated with your license with that name so that they can pay you, which is a great thing because you're making buku bucks, you want to get it. You have to have that registered with the state. And a lot of times that state registration, when you make that change, that's when you're starting to have to use that name in your marketing materials. And again, being careful on using, I guess what they consider to be overreaching, using the word LLC or PLLC with it, or PA as it may be, because they feel that it conveys you saying I have liability protection, aka insurance.
Also,
and another one there is making sure to have insurance. But that's more
we have a company
Matt.
to help you with that too. What if my current LLC is not my personal name? What if I said I'm Fabulous Debbie? Is that okay? What is your thoughts around that?
There's usually a few different options. There's you can change the name on Sunbiz. There's a pretty easy form that can be filled out to change the name. There's a doing business as, but you want to be careful with the doing business as. You want to make sure that that's something that can be accepted by your board, by the governing board for realtors. You want to make sure that they can approve that and agree with that. And a piece of it is being careful with the name, that it is something that is going to be approved, that we don't want to get too creative with names, because a lot of times a board or the state of Florida may not approve the name. So before you go to the steps of setting up an EIN, you usually can't set up a bank account until you have the EIN and the Sunbiz formed. That's one of those just to be extra careful with.
Also, what if I'm married? Can I have Mr. Debbie and John Smith LLC? Is that acceptable?
It may be possible, but again, it's one of those to be careful of. You are operating under a license, so the two of you are operating under a license. So if you are going to name the company something that you guys are going to use together, that makes sense. But if you are going to operate solo practices, report separately, or heaven forbid something happens to the relationship, the marriage, unfortunately, if you lose one of the two partners, you may have really hamstringed yourself when it comes to the actual entity. If it's a partnership, it automatically dissolves. If there's two of you, that can cause some big time tax headaches and tax burdens to get all of that changed over and fixed.
I'm getting a lot of comments, either the board or DBPR are requiring us to use our name as a licensed realtor in the LLC. Do you have any information about that?
Yeah, I would agree with that. That's what I've run into more often than not, is that they've required the use of the name. Where I've seen some people run into that with having common names can be a little bit of a struggle. And that's where we head to that middle name, that middle initial. And even then that can stretch to being a problem. When that becomes an actual issue, that's where a lot of times we either have to get an attorney involved to make sure that you're within compliance of your board, along with the naming conventions that the state allows.
And do you know, are we allowed to put Realty in the business name?
For the most part, from what I've seen, the recommendation for that has been no. I've seen, because of the fact that it infers, implies, gives extra behind what you're doing, they tend to frown on it as an institution. For the most part, the best and easiest and simplest form of formation is your name. And then a lot of people in their marketing material right below their name, so that it doesn't look like it's attached, put realtor in large bold letters.
Like the R, the registration.
Or the R, yeah.
So in your opinion, so my legal name is Deborah. If I were setting up an LLC, it should be Deborah Toohey, LLC, underneath that capital Realtor with the registration logo.
Yeah, and some of the other ones I've seen is a few times, like a good one with yours was I saw Deborah, Debbie, and doing that in the quotes.
Toohey, I know it's a lot hard last name.
And using the nickname in quotes, and that tended to flow across multiple states requirements. So that's a big thing in today's day and age, is people like to move and want to be able to take their established company, especially an established company of 4, 5, 10 years. They a lot of times don't want to have to close that company and then reform a new one, losing that business history, losing your, if you had to close it and start a new one, you can't say, well, here was this company's history that counts for my 2 years of past proof of business for that entity. It may show that you were in business for the last 2 years, but that specific entity's business credit, et cetera, would be reestablishing as a brand new entity. So if you're trying to actually establish business credit for loans, lines of credit, any of that kind of fun stuff, then that can really matter.
Any personal questions? I'm going to let you go right to Brittany on that. Here's one that's a little deep. You mentioned PA being archaic. However, it seems to be set up as a PA and elect to be taxed as an S Corp brings in the greatest tax savings. Is there a better combination for savings?
Well, there's trouble with PA out the gate. If you form it day one, and let's say that very first year, you don't have a great year. You make $5,000 or you have a loss. You are an S Corp. You are paying for an S Corp tax return. You have to do a reasonable compensation as a W-2. PAs cannot be formed as a disregarded entity on your personal taxes. So it does hamstring you right out the gate. How I talked about transitioning people from that sole proprietorship to that S Corp tax treatment. The PA, you have to make that decision day one. So now day one, if you've got big sales and you know that that's going to be something that's going to continue for you in that first year, then a PA may be an option behind that. And again, being mindful of multi-state or moving to other states don't, some of them don't allow for them. So being able to move that entity in the future, LLCs tend to be a little bit more flexible. And again, you are restricted to the nature of your business. So a lot of times that if you wanted to ever use that LLC for anything else, you can't, or that PA, you are restricted to the use of for your realtor profession.
So in that same vein, as an LLC, would you recommend having the S corporation?
Yeah, pretty standardly, where like I was, and we're going to get in the tax side of this on the back end, how much an S Corp can save you. And where I really like to see it is about that $40,000 bottom line mark, is when you start making about 40 grand, we want to look at making that S election for taxation.
All right, I think I've got the gist. Have a PA, was told by my CPA that I don't need to pay self-employment tax anymore. Elected S Corp for tax purposes. Is that correct?
Yep, spot on. You won't be paying self-employment tax, but you are absolutely required to have a W-2 wage, what's considered reasonable compensation. Now, your next question to me is going to be, what's reasonable compensation? And that's an adorable game. The government pretty much likes to throw spaghetti at a wall and whatever sticks. It's different by market. What's reasonable for a realtor in Miami versus what's reasonable for a realtor here in Ocala, someone that is part-time versus full-time, it varies greatly. I like to see it end up in about that 50-50 ballpark, that if you're let's say you made $50,000 of profit, keep it easy, taking about 25 to 30 in that W-2 wage and taking the rest as a distribution. And that distribution is where you're saving that self-employment tax. You're not having to pay that 15% self-employment tax on any earnings above and beyond that reasonable compensation W-2 wage. One big thing I recommend with that I've seen people try to do is, sure, I'll pay myself a reasonable compensation. I think it's reasonable to pay myself $500 a month. you probably are living on $500 a month if you're making 60, 70 grand a year. So there's a reasonability test to it in essence.
Okay, last question on LLC. David, thank you. You're doing a great job. If you have other LLC questions, because we're only on slide 1, right? David said to email him. He's taking a lot of your email address as well. So last question, Brittany, I'm going to come to you because I want to set up an LLC. You've just given me great information. Can you ballpark what that expense would be to me?
Yeah, we have a little bit of a variance if we have lots of multi-member setups, or if it's a single member setup, we tend to be about $250, and we do that, and we are $250, and then the state charges you an additional fee for the actual filing, and that has ranged. I've seen it range from about $125 to $150 for that initial filing. And ours also covers us getting your EIN paperwork done for you.
That's amazing.
And we do also have the ability to do your S Corp election. A lot of times that S Corp election takes place at the time, and a lot of times it doesn't. So we kind of carve that out depending on when you need it.
That's amazing. So if I've missed any of your questions, email David. He's in the chat there answering all of that. Let's move on, shall we?
Please. And yes, I understand navigating all of this is pretty much one of the most difficult things there is. I don't understand why they don't teach more of this in school to help all of us.
Hey, Brittany,
yeah, my head hurts. My head hurts right now, and we've just begun.
My head hurts, and I do this for a living.
Hey, Brittany, before we move on, I'd love to ask can you transition mid-year? I've seen that question a couple times. Can you transition to an LLC from an LLC?
Yes, so you can definitely do a transition mid-year. In fact, I see that a lot of times. The biggest parts of that is making sure that you update with your broker. That a lot of times, your broker's been sending you your money to your personal name through your social security number. Do not skip that step just because you went and formed an LLC on Sunbiz and assuming that it has been picked up by both your board as a realtor requirements there and with your brokerage that you're part of.
Great.
Okay, so jumping into what we were just talking about, that sole proprietorships, LLCs with no S elections or partnerships, this is where that self-employment tax question came in. So I've worked this up here, kind of a sample of, I'm a taxpayer. She was making 40 grand a year. That's coming through to her as a 1099. You can tell it's 1099 because it's coming down here under our other income. If it had been a W-2, we would have seen it up here. And she is paying, we've got self-employment tax going on, that self-employment tax sitting over here, and your income tax. So one of the things we want to be mindful of is the total taxation. Let's see, next screen. Self-employment tax. So the way self-employment tax works, we take that $40,000 of income. I'll just say we do some magic in there because this is messy and confusing. It is to everyone. You are not alone in that. We arrive down to a self-employment tax number though of $5,652. Now of that $5,652, only half of it can be taken as a deduction. When I'm saying deduction though, a lot of times people think that is take it right off the top. It does not. That is reducing your taxable income here for calculating the adjusted gross income. So you are getting to deduct it, but it's coming out of your adjusted gross income for calculating your income tax. So you're getting a reduction for half of it for calculating income tax, but you are still paying that full $5,652 of self-employment tax plus income tax. That's what arrives us at $7,834 in this example. And I kept this to a single taxpayer with no dependents. Again, this whole tax scenario changes if you have dependents, if you're married, filing jointly, married, filing separately, head of household. So again, we're keeping this very, very top surface because trust me, it would be terribly boring if I went into all of those.
Thank you for saving us on that.
Yeah. And then we go to sole proprietors with LLCs with no elections for planning taxes. This kind of gave us a good summary, but I'll keep moving since we're tight on time. Then we jump over to the S Corp land of things. This is where I like to factor in that wage component we talked about. In an S Corp, you're required to do a W-2 wage. So that W-2 wage here, we've kind of given you a mock-up of what that looks like. Social Security taxes, Medicare tax. Now, keeping in mind, you have the other side of taxes still, the employer side of taxes. And so now the employer side of taxes also has another tax in there, an unemployment tax that takes place. So we end up with employer taxes, employee taxes, and we total for about $5,326 of taxes in this scenario, where we have $40,000 of income. We're taking $25,000 as a W-2 wage. And now a portion of that, the employer, those employer taxes are deductible to the business. So that just changed the picture a little bit here. They are a deduction under that S corporation. So kind of running those numbers through, we've got that 40,000 less 25,000 less the employer side of taxes when we're calculating how much that S Corp turned as a profit, bringing those company profits down to $11,587. Now, that may sound a little scary at first when you say, my company only made $11,587 and I made $40,000. What bank's going to lend me any money? And keep in mind, you've got this W-2 wage up here. So when they're considering how much money you made, they factored both of these together. But you end up with a cool effect. You notice that total income went to $36,587, not $40,000 total, because we were able to deduct the employer side of taxes. So kind of running through that same scenario here. I'm a taxpayer, got extra excited, did this S election and now has that flowing through on her taxes. And so we start with that $25,000 wage. Again, that's where we're talking about that W-2 coming through, that required W-2. And we will come down here. We will also see that self-employment tax line went to zero. We don't have self-employment tax anymore, but we still have income tax. So we had those taxes being withheld out of paychecks and whatnot. You may have done withholding. This person in our sample fund scenario did no withholding, so that we could have kind of that apples to apples comparison. When we come to the income tax side, we see income tax of $2,428. And as an employer, I had to pay $3,413. And as a tax paid by an employee, what that was when we're doing our paychecks, remember there were taxes in here that we had to have kept taken out for Social Security, Medicare tax. Again, these scenarios can change if you're doing things like retirement plans. Retirement plans greatly affect a lot of these numbers. And again, that's another story for another time. And so that lands us with a total tax of $7,754 under this S Corp scenario that we're running right now. Side by side, that sole proprietorship under this same exact circumstance of making 40 grand paid $7,834 in taxes. Under an S election, $7,754. So you can see that's why I have about that marker. $40,000 makes the sense of when you should start looking at doing that S election. Before that, you're at about par and you don't have to have another tax return. With an S election, an S corporation requires a separate tax return, which carries its own special fun of having to pay for a second tax return. So I like to save my clients money. If it's not a right time to make an S election, even though I make extra money for doing the tax return, I'm not going to recommend you doing it. That's not what's in your best health and in your best interest. And I love accounting. Accounting is my favorite. So before we move on to the little last piece here, do we have any questions about the taxation side?
We do, and what I can say is thank God for people like you, because that face to me is like, accounting. So a couple of questions. Yeah. If we change our S Corp, LLC, wherever we are, maybe we don't have any of that set up right now, wherever we are, and here we are halfway through the year, and now I'm listening to you. Oh my gosh, Brittany, I need to set myself up. Can I still take advantage for the whole first half of the year? What does that look like?
Yeah, so it really depends. I hate to say that's always one of those fun answers. But a lot of times there's an ability to get the activity from that first half of the year, keeping in mind your brokerage hasn't put out a statement yet to you, that you haven't gotten your 1099 yet. That is your totals for the year. So one of the biggest parts is talking to your brokerage and asking them, if I set up this LLC, can my earnings from the beginning of the year be put to this? If they cannot, each brokerage is different for that. So one of the worst case scenarios you have is the first half of the year, you're a Schedule C. The second half of the year, you are an LLC or a S Corp or an LLC taxed as an S Corp. One of the big ones we tend to avoid in this is setting up an Inc., an INC. It just tends to not be flexible. It tends to be very rigid. It's a requirement for it to be an S Corp right out the gate. That's another one that kind of falls to that land of the PA in essence, that we tend to not use in these scenarios. They're right for some people, just tend to not be right in this scenario.
Also, so we have several agent there and I fall under this category as well. We are salaried, we are W-2 employees. We also have a division that is salaried agents, so they're W-2 as I am. And we are getting paid W-2, but we have some expenses, mileage, our board fees, so on and so forth. What does that look like for us who are receiving a W-2?
So I have some bad news.
Oh, say it ain't so.
Yep. For those getting a W-2, the times of itemization have really been going away. We're not looking at the same ballpark of having Schedule A deductions like we used to have. That's a part of it that's confusing, as a lot of people used to have a Schedule A where they would deduct business related expenses or mileage or things like that. And the big reason that we are not seeing as much itemization is that they raised the standard deduction. So your standard deduction is higher than it used to be, and actually somewhat significantly higher than it used to be. And so they see it as they're catching all that in that standard deduction being higher. Unfortunately.
Is there anything mileage or anything we're eligible for, or
one of the main ones I see is company cars. A lot of times that if you're using a company related vehicle, they include it on your W-2, the usage of it. And so you pay the taxes on it and you get the benefit of using the vehicle. That tends to be one of the places I see it, or employee benefits that they offer through work.
Well, that's a bummer.
Yeah.
You just took the air out of my cell. Let's see. So I think we're good if you want to move on.
Yep. And our next group here is exactly where you were headed: tax deductions for realtors. So some of the ones I tend to see, and I'll come in here with my little joke of even if your dog does his business in your basement, you still can't deduct it as office space. Sorry. I've heard anything from I like to have my meetings on boats to I want to write off my office defense dog. Those are not uncommon questions. And so the biggest thing when it comes to deductions, necessary and relevant to your business. we all love vacationing and things like that. Being mindful of what it means to have a travel expense. Just because you went to Tahiti and you like Tahiti doesn't make it a deduction as a realtor. Now, if you,
gosh, this is brutal.
now, if you can arrange to show some real estate while you're there, maybe help, I joke, but keeping in mind what actually is relevant to your business. A common one I get questions on is entertainment. Is my boat a write-off? Is a very, very common one in business I get. And the answer is standardly going to be no. That entertainment in and of itself is 100% not deductible. Whereas on the other hand, meals related to your business are 100% deductible. So I say often when it comes to this kind of thing, if you're going out with a buddy, have them pay for the entertainment, you pay for the meals and enjoy that deduction.
I like that.
Some other ones I see commonly missed, the things you don't think about, use of your cell phone for your business. Almost all of us have to do that. Home office deductions. Home office gets very, very weird when you start making S elections or are taxed as a partnership. For many of us that have seen a Schedule C before, or that sole proprietorship where it's staying on our personal tax returns, for that matter, an LLC, we have a little box on there that says home office deduction. You will not see that same little box on an S Corp tax return. So there's some other cool tax tips and tricks for getting around that. With self-rentaling or commercial rental, if you're going to be operating out of a place of your home on a permanent basis, as many realtors do. And if you're going to be seeing clients at the house and you want to limit liability protection of your home in use of business. So a big piece of that is if you're going to be seeing clients a lot of times in your home, we want to talk about the options there of doing commercial rental. And I hate to say that comes with more tax and that comes with sales tax. And again, we can help navigate those waters, but pretty much you get a tax, everybody gets a tax.
So mileage seems to be the trickiest. Do you
Yes.
have a suggestion, an app for that, or how would that be the best?
I do. I personally use My IQ. There are a number of apps out there I quite enjoy. It runs in the background. So every time I get in the car, it's tracking for me. And then come the end of the day, I can mark, was it business or personal? That trip I was on. And or if I'm terrible at doing those things, I at least have a log and I can go back and say, yep, that was business. Yep, that was personal. And do it with your head against your hand at year end, telling yourself, why didn't I do this all year? But you still can. And it also gives you a good guide and marker when you go, yeah, I feel like I drove 30,000 miles. And then you go into your My IQ and it says 18,000. You're in a much better ballpark when it comes to the potential of an audit. I'm sorry to use so many swear words in one presentation, saying tax and audit, but it's one of those that it's the most helpful thing is to have a log, because you are required to have a log. Saying I took my starting odometer and my ending one and subtracted them and gave a reasonable estimate, like I used it 90% of the time for business, not acceptable in an audit. So you don't want to have that deduction get disallowed.
And maintenance of my car, all of that.
So the cool thing is at year end, what I like to see people do is run everything for their car related goodies through their business and do a mileage to actual comparison when it comes to those gas charges and their repairs and maintenance. It's a little easier to track it, I find. If you can have them all in one place through your business, then I put some over here on this credit card and I put some over here on this, and then trying to find it all. One of my favorite tools, I'd say now we're closing in on about 98% of our clients using QuickBooks Online. QuickBooks Online has a lot of great tools for that. we can even usually help get a little bit of a discount when you go to sign up for QuickBooks Online. It also has my favorite function, which is an app on your phone that lets you take pictures of receipts, and it matches those pictures to your transactions.
Easy.
I love it. As somebody who myself, even knowing better, will not keep receipts properly if I didn't have that app. I personally have loved it.
End
You
of
can
the
even
day,
click and drag into it. So if you get a PDF of a receipt when you're online, you can just click and drag that receipt over. Bam, it's in.
end of the day, end of be gone with a shoebox full of receipts walking into your office, Brittany.
I don't take shoe boxes of receipts. I apologize ahead of time. I do not. That is for your fairy godmother, not for me. What I ask for at year end is summaries. So I have you go through and make it either on paper or on Excel, if you're not using an accounting-based software, a summary of your transactions. Those receipts are for you and the IRS.
Creative accounting. So Howard, hi Howard, it's always good to see you. Hope you're feeling better. He lives in the Keys and he says he absolutely needs his boat to do showings.
Well, and in some cases that is true. Like if you're showing islands or things of that nature, the fuel part of it and some allocation for the boat, not writing it off in its entirety a lot of times, unless it is actually a bona fide job requirement. Bona fide job requirement is the difference. And then a lot of times if you own it in the business's name, if you ever use it personally at all, you have to remember you then have to rent it from the business.
Okay, there you go, Howard.
Friend hat and business hat.
I look forward, Howard, to a boat ride next time I'm down there.
You and me both. I love
Brittany
the
and
Keys.
I and David, we're headed down to the Keys soon, Howard. We'll see you there. All right. So the app is a lot of buzz. The QuickBooks, a lot of buzz. That's amazing. Thank you for sharing. Any other tools, Brittany, that come to mind that would help you at the end of the year?
Yeah, that's been my main ones I use. The other one I use is when we start getting into a lot bigger real estate situations. And I'll even say I'll step over into the real estate investment side of things and things like that. I use bill.com as well for bill payment. But we do that because then if you have an office manager or things like that, they scan in all of the bills to us. And then we get all of that bill put into your accounting system and we pay the bill, but you get to approve it. So it comes to you, the chain of custody here. Office manager scans it in. We get it all the data put in, ready to go. Send you a right to an app on your phone or on your desktop, an ability to approve that bill and an ability to see the bill. And then comes back to us all approved. We get it paid and out the door. So that was the other, we offer that as more of like a CFO services to where we're helping in that cash flow managements and pieces like that. It's harder to fully do cash flow management if we're not paying the bills, because we have no idea that you just wrote a $5,000 check and your bank balance is $6,000. We wouldn't know that outstanding check just occurred unless you are actively using QuickBooks when you write a check to put in that I just wrote a check.
Let's see. Sorry, I was enamored with what you were saying. What is the 6,000-pound luxury vehicle write-off about?
Yeah, so there's limitations with luxury vehicles that it limits how much can be written off over certain amounts of time, and it is an ever-moving marker. It changes every year. It is definitely something you want to check each time that you're going into making a business decision. It's the cost of the vehicle a lot of times that's dictating that, the nature of the vehicle. Keep in mind what the government's trying to do there is restrict, did you need a Jaguar to do your job?
Yes.
Did you?
Yes, Brittany, I do.
So somehow I can only do tax in a Lamborghini. I don't understand how others don't, but I can. My old Toyota enjoys its existence. That's what they're watching for, luxury use. That wasn't needed and necessary. Again, with those deductions, that's where they're trying to peg. And a lot of times what can help with that is an income inclusion the other way back, that if you are owning it, leasing it, etc., as a business, and you're ever going to use it personally, then you in essence rent it back to yourself personally. And it's good to do that, keeping in mind commuting does not count. Commuting is not a business deduction. So if you are commuting to your office, that mileage does not count. The same thing the other direction then, if you're driving home in a business vehicle, not 100% business use anymore. You've driven home. That's commuting. So at that point, you have the problem of are you using it personally? Did you stop and get groceries? You used it personally. I rarely recommend 100% business use vehicle unless you're in something like AC and refrigeration, where that AC van is sitting on site. They drive to work, they pick up their work van, they drive it around all day, come back, drop it back off, drive back home in their personal vehicle.
Last car question, lease versus purchasing a car as a realtor. Any advice, or is that a one-off?
So not entirely a one-off. A lot of it's based on your use. So it's not necessarily any more benefit or any more of a tax deduction one way or another. It could be. There's a potential for it to be. Let's say you bought a car in the business name. You could possibly take a 100% bonus depreciation on it year one. So you buy a $50,000 car that qualifies based on its nature. We were talking about weight requirements and such. And you write off all $50,000 year one. Now, what that means, even if you're making payments the next 5 years, you're making those payments the next 5 years, and you ask, well, now what do I get as a deduction? You get actual expenses only. So you'll get fuel, you would get insurance, keeping in mind, if you get a business vehicle, you have to get business insurance for it. Often that can be 2 to 3 times as expensive as personal car insurance. So be very mindful. Ask a insurance professional first. If you don't have one, reach out to me. I have 2 or 3 great ones I work with. I'm more than glad to refer them. And most of them work throughout the state as well. And with that, we do as well. So if you have any questions, concerns, we have a full paperless remote options, portals. We can help throughout the whole state of Florida and with most corporate or with most tax returns for other states and things of that nature as well.
So David's done a great job. He said he would send the slides out if anybody would like to see those. I've seen a lot of emails go in the chat group. Also, team, tomorrow's Slack news will have this recording in there. So I know a lot of times you have the best intentions to listen to some valuable information, but your client that you've been trying to get a hold of for 52 days finally calls. So not to worry. We will have this link in the Slack news tomorrow. More addresses are coming in. That's awesome. More emails. Make sure you put your email address in the slide. David, I think we lost David. I think we'll be able to get this to you, Brittany. I can share the recording if he's missing any of this, or if he's still there, I'm not sure. Lot of addresses coming in. So if you miss anything, I'm not sure what happened. David jumped off. If you don't get an email from Brittany, you see her email. Is your email on the screen?
It is not, but
You have her phone number right there.
That.
And we lost visual on you, Brittany.
Yep, I was okay. Switching off the share.
Okay. just wasn't sure if you knew. Lots of thanks you. You're awesome.
Yeah, and if you have any questions, we actually prefer you to call in than email in. Honestly, we get 75 to 100 emails minimum a day. And I would much rather be able to set up a phone appointment with you to answer those questions, or if it's a quick bookkeeping question, tax question, we have a team of people here too. So if I'm booked up for a day, I want to make sure we get you a response back as fast as possible. And emailing me if I'm in tax meetings for 8 hours that day and I could have gotten you a response faster, I much prefer to be able to do that as a team here.
And I know this is a silly question. You're in Ocala, I'm in Orlando. We do not need in today's technology to meet with my shoebox in person, right?
No, and in fact, I've in this crazy time of COVID, I have done tons of tax Zoom meetings. And very frequently, that is a common way that we have been doing meetings right now. We have portals for you to be able to do everything digitally, sign everything digitally if needed. Some people right now have had mobility issues, things like that. So we like to try to accommodate as much as possible.
Some are not able to see the screen. I'm typing your number and name
I
in
can go back
the
to
chat. Oh, it looks like somebody else did too. Brittany got it. Good. Okay. So, and not to worry, team. Again, all of Brittany's information will be in Slack News along with this recording. So if you're, a little panic struck in that she did just share some incredible information to help us to pay our taxes properly. Did I say that okay?
The terms are avoid and evade. We want to legally avoid, but we don't want to evade.
There we go. We want to avoid and evade.
Not evade. We don't want to evade.
We want to avoid and not evade. Thank you. Oh my gosh. So not to worry. We'll get that out. No, we are not Al Capone here.
That's how they got him. They didn't get him for the other crimes. They got him for tax evasion.
Dang it, those IRS people. Final words, Brittany, anything you want to share with us?
Nope. And the main one is your questions aren't dumb. A lot of times people are like, you just said this in a presentation, I don't want to ask you. I love those kind of questions. Those are my favorites. I like a client to feel like they actually understand their books and understand their taxes. I want taxes to happen with you, not to you.
Oh, I like that. Yes, me too. Brittany, thank you so much for your time. I'd love to ask you back in a couple of months, maybe. I'm sure there's always something new and exciting. We'll avoid that pesky tax season, of course. Thank you so much for your time today, you guys. Brittany is amazing. She's got a ton of information. She works with realtors all the time. She gets us. She gets how our mind thinks. Give her a call. Her number's on the screen. Review the recording that just will go out tomorrow. Brittany, David, to both of you, thank you so kindly for your time, your information. And hey, Brittany, if you need to buy or sell, give me a call.
Will do. Thank you so much for having me.
Thank you. Have a great day. Bye. Bye, Slack Pro. Thanks for joining us.
Bye.